Founders Forum, Episode 2.
Open your mind to a new episode of the Founders Forum, the podcast championing a free economy, sound assets, and blockchain solutions. Each week, your hosts, entrepreneur Cole Snell and economist Bob Murphy, interview pioneers and free thinkers to help you develop into the architect of your future.
Welcome, everyone, to another episode of Founders Forum. Today, we have a treat where we're interviewing two individuals, so two for the price of one, and they're both experts in financial strategies for business owners. They have extensive bios. In the interest of brevity, let me just read to you some excerpts. So one guest is Rick Scruggs, who's worked with business owners and personal clients in Central Virginia and the Southeast since 1977. He's the principal of financial designs and the creator of the Vision Advocate Experience. He's a registered representative of and offers securities investment advisory services and financial planning through MML Investor Services. And he's licensed to provide insurance through Massachusetts Mutual Life Insurance Company, or Mass Mutual, as they are known. Our other guest is John Ocwieja, who's a certified family business specialist in Chicago, who has specialized in financial strategies for family businesses. His mission is to help people achieve financial success for themselves, their families, and their businesses, whether the need is for key employee retention or a benefits package, or a business owner's individual retirement or estate plan. John is also affiliated with Mass Mutual, and some of our discussion will touch on how individual business owners can use properly tailored business-owned life insurance policies, whether to attract employees or retain them. And these are some of the details that we're going to get to in the episode. So without further ado, here is our discussion.
Rick and John, it's so fantastic to be able to have this conversation with yourselves and Dr. Murphy and I. One of the things that I can speak confidently, Bob and I are super interested in, are founders of businesses. We came out of this thing called COVID. You can say what you want about it, but it's had an impact on business. John, why don't we start with you? What do you think about business owners, founders going into 2023? What do they have to look out for?
What do they have to look out for? The number one, and Rick is certainly, I think, going to agree, and it's interesting because we are both in two completely different markets. He is, ensconced in small town Southern America, and I'm in the third largest metropolitan area in the country in Chicago. The constant complaint or the constant concern that I hear, especially in my peer networking groups and my Vistage group, is not only the acquisition of talent, but the retention of talent. And I have some personal experience in that. My paraplanner, who's critical to my operation, decided at the beginning of the fourth quarter that she wanted to be a full-time mommy because her husband got a significant raise that, while it didn't eclipse her total compensation, made the delta of that bearable for them. And then I had a situation with another one of my assistants who was in a nasty, nasty custody battle, and she had to take extended family leave. I am literally the chief cook and bottle washer. And I was discussing this with a friend of mine in Los Angeles who has a very interesting business. They're 100% virtual between Asia and the United States. And they're in the biotech field. And he made a comment and he said, John, all entrepreneurs have the same problem. And I said, what's that? We don't know how to run our businesses.
Bob,
don't look more instructions.
Yeah. Well, my paraplanner I do have something called the cookbook, which is a big 3-ring binder tabbed with everything that has to be done front office and back office. But going back to the original premise,
so wait, John, I got to interrupt you for a sec here.
Yeah.
So did you hand out this 3-ring binder to your clients, your business owner clients? Is that
no
something that you do? No.
This is specifically for my business and my personal challenges and to keep the situation going for me. Now, do I
Right.
tell clients, hey, you better have a cookbook? You absolutely need a cookbook for every aspect of your business, from HR to back office processing to manufacturing to front end marketing, customer client engagement. It has got to be, built with military precision.
Okay, now before we get too far down the rabbit hole, I want to get Rick to weigh in on the
Sure.
question, and then I'll hand it over to Bob. Same question, Rick. So John's answer was, what did you say again? Problem with business owners is they don't know how to run a business.
Yeah.
Such essentially. Okay, Rick, what do you had a laugh at that? What do you think?
Well, I think that a lot of private business owners had entrepreneurial seizures and decided to go into business on Friday night. And instead of working for somebody 40 hours a week, they decided to go to work 80 hours a week for themselves. And because they were technicians or really good at that one aspect where they used to work, going into a business enterprise, there's a multiplicity of roles and functions that now have to be dealt with. And that's not what everybody's cup of tea is. If somebody was a salesperson, now they've got to be an organizational person. Somebody, you can look at the EOS or Pinnacle, different systems out there for who's the integrator, who's the visionary, who's the operational people. Accountability that an owner had to go into business for themselves, now they've got to ensure that they're hiring people who understand goal setting, accountability, execution, alignment. And COVID just upended that over the last 3 years. When 08, 09 hit, there was a whole bunch of people who thought they were going to be exiting, and that recession pushed people back, 10 years. Then all of a sudden, after 22 being this disaster in many, many ways, but that's not really true, because most of our clients, whether it was construction, distribution, manufacturing, all had great years. But they're suffering in the human capital space. They're suffering in hiring new talent. So it's a smorgasbord. Nassim Taleb talks about it's not good enough to be resilient anymore. You have to be anti-fragile. So you got to be able to take the blow and then grow.
Just to follow up on what you guys are asking there. So are you saying this is something that is if Cole had asked you back in 2016, what are business owners, what's the number one issue going into 2016, would your answer have possibly been different? Like, are you saying it's particularly pronounced now? Because as an economist, I'm seeing it at the macro level, but you guys are also saying, like, even with your individual clients, like just attracting talent and retaining it is just the labor market's really tight for various reasons.
Well, everybody's 7 years older, Bob. And, everybody, John shared this with me years ago. The problem with man is he thinks he has time. And so there's this proverbial kicking of the can. And so the reason why entrepreneurs, business owners need to assemble a team is because you have to have collaboration in our complex society. You can't get it done solo anymore. The days of solo execution, we believe at our firm, it's over. And we've been part of the problem because people would operate in silos. And as you know, a silo has no window. So how in the world could the CPA, the accounting firm, the banking firm, the insurance advisor, somebody's got to be in charge of the process. And you have to have a teaming system in order to hold people their feet to the fire. And that's coming. AI is bringing that to the forefront every day. But when you're 55, you've got a lot more juice than when you're 65. You've had maybe more health issues. You're tired. You're worn out. Now you may live another 25 or 30 years, but if you can't figure out how you're going to monetize your life's work and not get screwed at the back end, you got to hop on it.
Yeah. And I'd like to add, you had an interesting comment, Bob, about tightness in the labor market. There's no evidence, really, that there's tightness in the labor market. I think it's more a change of attitude in potential employees and potential stakeholders. Work from home set some absolutely horrible precedents. You know, how can you, as I sit here in an office of 42,000 square feet and there's maybe 9 people in the office, how can you recruit, train, and develop into a culture, let alone build a culture who's going to work from home or wants to work from home? Right now, I saw, and I'm sure we're familiar with all of this, the term rich session. I think with the big tech companies who are having some pretty significant, I wouldn't say humongous, but they're having sizable layoffs, all they've realized is that they were overpaying and overstaffing for a very, very long time. They got fat and happy, and they can lose 5,000 here, 10,000 there, but another 10,000 there, and still maintain the same level of profitability and growth that they experienced prior to the pandemic. So it's a psychological and a cultural issue that we're facing, not necessarily a macroeconomic issue of tightness in the labor market.
I would agree with that. Bob, we interviewed 42 people with a headhunting firm for our firm over the last 30 days. 100% refused to come work in office. And we're not going to hire somebody who's not going to come in office, because we need them to be a part of the team, the culture, understand the environment, the collaboration, et cetera. Now, does that mean we won't go consider hybrid modification? We're probably going to have to. But today, that was for a commute of 15 minutes, and people refused to come into an office. That was pretty astounding to me.
Yeah.
It's pretty remarkable when I hear things about that, Rick. Did the people that said no to the job that you were offering, I mean, and understandably, you and John have had successful careers. You're likely offering good jobs to these people. Did they give you any other feedback as to why? Was it just a hard no?
They said if the job requires coming in office, not interested. Then we pay above average. We have great benefits, vacations and holidays and personal time off. Didn't matter.
Yeah.
So I think we'll adapt. That's the beautiful thing about capitalism, is you have to adapt to find the ways to make the best use of your resources to get that return of revenue and margin. Without margin, you're out of business.
Very true. Very true. There's a very well-established leader in financial services that Rick and I know very well. And he told me once, and he built a tremendous organization, coast to coast, very specific and detailed target market, very specific and detailed prototype template of the advisor he wanted to hire. And he told me 10 years ago, or maybe even longer than that, Rick, you know who I'm talking about, for your staff people, you have to, and your rank and file, you have to offer them a career path. You have to offer them a progression of personal fulfillment and development, not just a job. I'd suggest, with the conversations that I've been having, both inside mine and Rick's industry and outside, that model doesn't work anymore.
Sure.
So, Cole, I would just add to that. People today have discovered also during the last 2 years, they've had time to do a lot of exploring on the internet, for example, about compensation and benefits and stock options. So they have a lot more knowledge today. And so if we've got a manufacturing operation, 150 employees doing 30 million, generating 4 or 5 million of profit, but the owners have not created equity or phantom equity for their key people, they're going to lose them. Yesterday,
Well,
Go ahead.
Yeah, go ahead, Rick. Finish your thought, please. That's right. This is some fascinating stuff you're getting into.
So you've got this acronym WIFM, what's in it for me? And the second part is IP. An owner today must provide irrefutable proof that what they're telling somebody they're going to do for them is contractually true. It's no longer a handshake and Bob, we're going to take care of you. Mary, stick with us for 20 years and you'll be fine. Those days are over and out.
One of the things that you mentioned that I really relate to are people sitting at home for 2 years, forced to sit at home for 2 years, obviously disrupting the kind of go to work mentality, coming up with all kinds of acronyms. Dare I bring up the other acronym, which I don't even really know what it stands for, but something about WOKE. I won't get into it, but there's something about that it says a lot about what maybe potentially what we're talking about. But it makes me think, okay, well, all these people are sitting at home, they're searching the internet, they're watching Netflix, and they're watching documentaries about maybe potentially waiting around for the next Reddit GameStop short squeeze, and they'll think, okay, I'll just make all my money on doing some kind of what's it called, Wall Street bets type strategy where I can participate in a short squeeze on a hedge fund and I'll make all my money there. Well, I think this is lightning in a bottle.
Far too much credit, Cole. I would not. I think that it's a bell curve. There is that 10 or 15% who may be thinking that 1% will execute on it. The rest are going, the party's over in terms of people getting paid to not work. I think the privilege of work, I can't imagine going through life without having had the opportunity to work. I think it's been a privilege. Most of our clients, whether they're first generation, second generation, we've had clients now who are third and fourth generation businesses that we've worked with over the last 40 years. That pride and privilege concept is part of their culture. So culture is now a critical element to attract, retain, and build success.
But it's crazy to me, though, that you described a company like yours that is offering benefits. I mean, and you use the term a good benefit plan. Most people would suggest that benefits are good benefits. I mean, any benefit in this day and age is good, because benefits are that ship has sailed in most organizations. A lot of businesses don't offer benefits. They only offer you a contract. It's a term of employment. You can get a job with benefits in this day and age. That's very special. It's from a benefit perspective, people still weren't willing to take the benefit package. So, I mean, really, what is the solution for employers today? I mean, is it a better benefit package? Is it equity? You spoke about equity, and and how can entrepreneurs and founders and business owners afford, say, if you're not publicly traded, how can these founders afford to give their employees equity? And this could happen and I may even be baiting you into a conversation to potentially around cash value whole life insurance here to some degree. But if I am guilty as charged, because I know what I do in my businesses for my employees to retain them.
Right. So there's a little bit of maybe a contrast. We work with approximately 76 private and family businesses, serving over 4,000 employees. And we won't work with an employer who doesn't offer a benefit package. They got to offer health, vacation, retirement, 401k, profit sharing. Otherwise, we think they're scarcity thinkers. I may be wrong. We're looking for abundance-minded owners who believe they have a bigger future, who want to take massive action to make sure their enterprise stays in business and remains profitable. And it's hard work. I mean, that's the other irony. I mean, I don't think there's any get-rich-quick scheme out there. The magic formula of LHHW gets you started, long hours, hard work. But at some point, an entrepreneur must move into creating teams, because teams get more work done. And but you're only as strong as your weakest link. So you've got to have heightened awareness, because without any self-awareness, you can't have any progress.
Can I ask you guys on this just to help? Because again, I think some of our audience, they may be people that are thinking of starting a business, and so they understand that conceptually what you guys are talking about here, but just in terms of to extend what Cole was asking, like practically speaking, so they're going to try to attract a team, like a core founding group, let's say, and then what principles do they go through to determine, how much of the company do I give away, or maybe that's not the right way to think about it. Like how much
way to think about it.
Yeah, right. Okay.
I would say that we've also been involved in the employee stock ownership space for 40 years. We've had owners who built those programs and had $15 an hour employees retire after 20, 25 years with $500,000. And the owners say it didn't cost me anything.
Yeah.
It's because they were looking beyond just Friday or the end of the year, and they understood, if you want to have a capitalist system that works, you better have some capitalists who can benefit from it. And just like stock options and phantom equity programs, if they're designed properly, they don't cost the company anything because they're based on goals, targets, and achievement.
Yeah, very much so.
So the idea is that you're incentivizing the employees, and so the company is more valuable because of the existence of those incentives, and hence it pays for itself in a sense.
We think so.
Yeah.
The other issue that I think needs to be brought forefront is the pipeline. This is an interesting anecdote. A longtime friend of mine of 40 plus years reaches out to me and says, Johnny, can you help me? Or actually, can you help my son? He's a computer science major at Michigan, and Michigan has a especially rigorous undergraduate computer science program. And he's running into a problem in obtaining an internship. And the problem he's running into is the excessive amount of gig workers. Why bring on an intern, be it a junior or a senior in college, no matter the program, no matter the school, when you can hire gig talent that is more than willing to work and do code, in this instance, programming, at a Starbucks and just hit send and send off their code. So establishing the pipeline of future talent is really critical. And while the idea of phantom equity and ESOPs, which I love, thanks to Rick, who taught me that business, and deferred comp plans, when you're looking at your entry-level 22, 23, 24-year-olds, while the data may suggest that Generation Z is concerned about their financial future, they're not turning to their employer, and they're not turning to advisors who, Rick and I collectively have 70 years of experience and, well into the, 5 figures of personal interviews. They're not necessarily looking to us for that guidance. ChatGPT is scary. The proliferation of financial services sites on the internet is scary. And where it used to be analysis to paralysis over product or plan, now it's analysis to paralysis on the advisor, if an advisor is even chosen. So to Rick's point, the way forward is a team. The second issue is understanding exactly what Generation Z's drivers are, because it's not necessarily money.
There's this new paradigm. And every generation that goes through it, I don't think it's like a market correction is normal, natural, and necessary. You must wring out the excesses, and it's not always this diagonal line or hockey stick going up. Having perspective, though, is critical. So mentoring is crucial. Culture of an organization. I like the word pipeline that John used. Organizations had better be thinking, how are we going to find that guy or gal 3-5 years out? Because if you're thinking about 3 months from now, you're gonna struggle. But capitalism is alive and well. There's always going to be headwinds. You just look at it. Napoleon Hill once said, we have to be grateful that we're responsible for finding the seed of equivalent benefit from all adversity and setbacks that we come into. Because if you're not grateful, you cannot see. You're going to want to blame somebody else for your issues. So take the negative. And this is not pie in the sky, in my opinion. It's a philosophy. So you really want to understand an entrepreneur, business owner. What is your philosophy? Because if you don't understand, it's all about product, and it's not about solutions. It's not about solving big problems. Clients we work with don't want to solve small problems. They want to solve big problems, but they may not want to do it today, and they may not want to do it with us. That's part of that chemistry issue.
I definitely believe that one of the founders, people that decide to be founders or entrepreneurs, they want to solve problems. And one of the biggest problems that they're faced with solving is really defined by a lot of the conversation we've had so far, which are problems around people, understanding the most consistent part of a founder's day or an entrepreneur's day or a CEO's day, or the consistent inconsistency of other people in a lot of ways. And so I think we've done a really good job kind of diving in this conversation into identifying a lot of these problems. And as you pointed out, Rick, on the other side of a problem, obviously there is a solution. And so we need to kind of dive headfirst into problems. And we're going to have people problems as founders and as entrepreneurs and as advisors. If we could switch the conversation a little bit now, actually to the product side of it, and look at maybe from a balance sheet perspective. So we have a founder, he or she has gone out, they've come up with a big idea, now they're going to go and execute. There's not many founders out there that go after small ideas. I mean, first off, right. I think it's just inherent that if you're a founder and you have an idea, it's probably going to be outrageously big. And now they have to think, okay, well, we have to go and execute on this. We have to create a flywheel. The flywheel has to go full circle, and at some point in time, spit out $1. Now, what does the balance sheet look like? Now, what advice would you give to that founder that has some capital, they're getting going? How should they target the intentions around a balance sheet? Understanding a strong balance sheet will get them everything that they want, which is likely more capital.
John, you want to answer that first?
Yeah, sure. Thanks. I'll give it a shot while you cogitate. No one starts a business without the single core objective of making, and I forgot the acronym, big, hairy changes to whatever the status quo may be by being a disruptor in any industry. And that translates into a really comfortable lifestyle. At the most visceral level, we all go to work every day for 20 or 30 years of our lives, and we trade our passion and our skill and our knowledge, our time, for some of the world's money. We make that trade so that we can have an enjoyable, comfortable, and sustainable existence. There will come a time in the future where we either have to retire or we're forced to retire. Retirement isn't necessarily a choice in certain instances. So the first step in looking at a balance sheet is taking care of the owner for his personal security. Now, and Rick isn't going to bring this up. I know he's going to bring this up. Part of the assets of that owner's balance sheet is their business, which is a completely different asset class when compared to other asset classes of stocks, bonds, mutual funds, etc. So, number one, I remember my grandfather having said, who started in business in 1929, actually in September of 1929, started a screw machine shop in Melrose Park, Illinois. And incidentally, the only thing that kept him going through the Great Recession, or the Great Depression, was the fact that that screw machine shop happened to be literally located across the alley from International Harvester. So he was the vendor that could deliver screws and then eventually springs faster than anybody else. And his driver was 6 kids at home in Bellwood, Illinois.
That'll do it. I think, Cole, to add to that, we've been very successful. I had a great mentor who just said, mortality is 100%. You're here for a very short visit on the blue planet. And if you understand human life value, which is, are you going to take your God-given talents and put them to use to create something? And then people like John and myself and you come along and say, and by the way, why wouldn't you want to insure your future tomorrows and build an asset on your balance sheet? So today we've got our corporate clients have well in excess of probably about $150 million in cash values of life insurance, all guaranteed. It didn't decline like the bond market last year, 15%. It actually went up 5%. In the last 6-7 years, we've probably paid out close to $50 million in death benefits. People do die. Businesses got to continue. Shareholders got bought out. And yet we're dealing with a company right now today, very successful. Worth maybe between $50 and $100 million. And they'd done no planning because they had their nose to the grindstone. So we have to interrupt that system to introduce not the product, but the concept and understand their philosophy. Once they understand it, how we can help mitigate their risks. I don't care initially if they buy term insurance or not, but if you don't have the parachute on and in place when you need it, you ain't ever going to need it again. And so we probably got $500 million of term life insurance that continues to convert every year to cash value life insurance. It's one of the greatest assets on a balance sheet.
Well, there's a lot you just said there, but I want to just highlight, because I know to a lot of people who, when they're thinking about cash value life insurance as an asset class, and I can tell they're thinking of it as, so it's basically like I'm just investing in a bond fund. But you just pointed out that no, interest rates rising does not mean that your clients all got crushed in this last cycle.
I really push back, and Rick knows this and Cole knows this, against the characterization of life insurance as an asset class.
Right.
There was a guy who wrote a book a number of years ago, and that was the title of the book, Life Insurance as an Asset Class. The operative word being as, which is a simile, right? Making a comparison. It wasn't life insurance is an asset class. It's life insurance as an asset class. And that is absolutely critical. And it's not an idea that's old. In preparation of today's talk, I dug something up. The founding text of the entire life insurance industry. This is the 1956 edition of The Economics of Life Insurance, written by Solomon Huebner, who was a professor of fire insurance at Wharton Business School. And the 56 edition is particularly notable in that it's the numbers that he uses are still scalable today. And it hasn't been corrupted, and I apologize to Dr. Finke, who may actually listen to this podcast. It wasn't corrupted by needs analysis. The appraisal of insurance is pure classical economics. When you insure your home, you don't subtract the amount of equity from the amount of insurance you buy. You shouldn't do that with your life or your business either. And in the preamble of the book, Huebner lays it out very eloquently. The basis of life insurance is the dollar value of a human life. The factors of personal character, health, industry, education, training, and experience, creative ability, and the driving force and patience to bring about a realization of what the mind creates. Were it not for these values, there would be no property values. The human life value is the cause rather than the effect, the permanent producer rather than the temporary product. And then he goes on and says insurance is an integral division of economics. Economists have long experienced difficulty in assigning to insurance a place in the science of economics. They have been accustomed to grouping economic activities under such time-honored classifications as production, exchange, distribution, and consumption without being able to allocate insurance to any one of those divisions. Insurance to them has been a riddle, incapable of assignment definitely to any one of the major divisions of economics. For this reason, there is little emphasis on insurance in textbooks, on economics, corporate finance, investments, and other applied fields of economics. Fields of economics generally used in the curriculum of our collective schools colleges of business. Essentially, what Huebner is saying is there's production, which is I'm going to make something I can sell. There's consumption. I'm going to buy something that somebody made. There's exchange. I'm going to trade one thing for another for an arbitrage. There's thrift, and all thrift really is future consumption. And then there is insurance. And insurance is in place to make sure, or insurance is placed to make sure that the other four continue, no matter what happens.
No, it's the beauty is being the best kept secret is of no value in the marketplace. So if you've got a great product or you've got a great system or whatever, the role of the advisor, the role of the CPA, the attorney is to collaborate so that when an owner sits down for reviews quarterly, semi-annually, or at the board level, there's somebody who has the courage and the discipline to ask those crucial conversations about what if. And, what if is going to happen? It's just a question of when. And, it's just not a big deal. The big deal is, though, you've got to get through all the noise today, because there is a lot of noise, to get into that one-on-one conversation where somebody can feel like somebody's going to hear their future vision. So anyway, that's a little philosophical, but Cole, it just works. You never have to apologize for it. You never have to, you don't have to be embarrassed about it, because it just works.
It just works. And it has for almost 200 years. Well, 200 years in Canada and, close to it in the United States. One of the things I really picked up on, what both you guys were talking about, and Bob, you kind of brought it up, is, the idea of, a lot of founders want to have the ability to use, $1, 2 times, or the kind of the idea of an and asset. What kind of asset do you want? I want an and asset. I want an asset that I can do one thing with and then another thing with. So they kind of, but I just heard you kind of, and I've never really thought about it this way. And instead of an and asset, it's an as asset. And then it said, it makes me think a lot about something I've been kind of philosophizing. If we want to go stick with the philosophy kind of tone here, Rick, kind of say to the average founder, what would you want your balance sheet to look like in the future? Or even the average person, just say, describe some assets you'd like to own. Oh, gold is good. Maybe some cash is is nice. Some real estate is okay. If I'm really wealthy, maybe one day I'll own some art. And so these are all, I ask people these questions. What kind of asset would you like to own? Or could you describe some assets to me? And then I would say to them, okay, well, which is the most important asset in the entire world? And they would kind of go, they'd recite the same assets back to me. And I could say, no, you're wrong, right? There you go. Rick, you got it. You just nailed it. You already know where I'm going with this. I go, and I say to the average person, what is the most important asset in the world? And I say, think outside of the box. They go, the happiness, my family. I say, yeah, here you go. You're closer. How about a human being? And they go, well, that's an interesting asset. And I said, it's the most important asset. You can't argue that. We've established that. Then I said, well, you know how to leverage or evaluate gold and art and real estate and cash, and it might be in investments. They say, yes, we do. Well, how do you do that with a human life? And they kind of go, I don't know. It's the most important asset in the world, but I don't know how to evaluate it. And I say, well, how about life insurance? I mean, fundamentally, that's what it does. It's a valuation of the most important asset in the world. Hey, and you can leverage it, and you can trade it, and you can do all these fantastic things with it. And then I just kind of like blow people's mind, and I say life insurance, and then they kind of run for the hills. They just check out of the conversation because, John, when was that book written? 1956. So life insurance has been misunderstood since all the way back then.
Huebner first wrote the book in 23. The 23 version isn't as robust as the 56 version. However, the 56 version isn't available to the Library of Congress because it is owned by the estate of a family that was instrumental in creating a very, very popular method of programming and placing life insurance and other financial products. And he owns the copyrights to this edition.
So, John, let me interrupt you with this comment, though, because I think we don't want to lose this on the audience call.
Yeah, sorry.
Nobody's used the word investment because it's not. It's insurance. However, we always show an owner two balance sheets. Balance sheet number one is cash, AR, equipment, whatever, payables, liabilities on the other side. Then the second one reduces cash and turns it, but it's now there's a new chart of accounts, cash value life insurance, with a little asterisk that says there's a second value, which is $5 million death benefit. Which balance sheet looks better to you?
Well, ask the banks. They'll tell you Boley.
Well,
Boley, look, I know the guy. I was fortunate enough early on in my career to meet the guy who invented the Boley and the Coley market. And, his original office is literally right down the block from where I'm at. And I know his best protege out in Arizona now, who lives in Arizona now, who I think if I asked, though I would never ask this question, no one sold more life insurance, death benefit, or cash value than this gentleman in California, in Arizona, who used to live in Chicago. And it was in the corporate market. And
so John, here's my question. When you said Boley, were you just referencing, Cole, that banks own vast amounts of cash value life insurance?
Yeah, I was, Rick. You picked up. You picked up on what I was trying to say. Yeah, you got it. Nailed it. Yeah.
Okay. So I think John and I have seen in our work together, and it's just really simple. Have conversations with people who care about somebody or something, and ask them, do they think they have a bigger future than their past? And if so, are you interested in knowing how to put a moat around the castle? And we're going to give you the clicker so you can raise and lower the drawbridge. And when you want to raise it at night, raise it. And when you want to lower it, let the people in that you want in, kick the people out that you want out. And it's amazing, though, when an owner can get hold of, I have a client who got hold of his insurance in a desperate situation, $1 million. He said, what I got to do? I said, do you want $1 million? He said, yeah. I said, okay, it'll be here in 48 hours. Like we've had we got story after story after story. That's not what matters today, Cole. What matters is getting the message out that if you haven't had the conversation about how life insurance, cash value life insurance can work in your business with your key people, then you don't have the whole story. A 359-degree circle is not a circle. It's 359 degrees.
Let me go ahead and ask my co-host here a question. Get Dr. Murphy to weigh in on is this?
Well, can I ask Rick? Do we still have you, or do you need to leave? I know you had a hard stop. Are you still good on time?
He's got 4 minutes.
Okay,
4 minutes. Yep.
Okay,
4 minutes. Yeah. So let me jump in and get Dr. Murphy's opinion here about this as asset. I like Rick. John. I'm gonna steal the as asset, and you maybe should convince Bob to write a book called The As Asset. Who knows, or not. So Bob, what is this as asset misunderstood? And you've written a number of books you've written a lot of books on a lot of things, but what do you think about that?
Well, right. I mean, it's like I say, just in my work, I wasn't in production, but I was certainly around people who are, and I was trying to help people with their marketing and that it's, I mean, as you guys know, at least in the United States, I don't know if it's as true in Canada, but I mean, there's the so-called gurus just go around telling everybody cash value life insurance is, quote, the place to put your money. And so there's a lot of, and that's actually what I wanted to ask you, Rick, too, is, so I think a lot of people thinking about founding a business or people who already have one up and running and are considering incorporating this, do they need to convince those key, like everybody else, of the benefits, or just if they want to do it and they see how it works, or do you tell them, well, no, you really want to get your whole team to understand what's going on, or it's the kind of thing you can go ahead and do this, and then maybe they'll just see how it works?
That's a great question. So once the owner buys, we always offer to the top tier of key employees significant life insurance, and nobody ever I've never had anybody turn it down. The only people, my mentor said, the only people who turn down an offer from the employer for insurance are having an affair, have an alcohol or drug problem, or they're leaving your company and they just haven't told.
Yeah. That pretty much summarizes it right there.
Yeah. The funny thing is also that the industry, or the peculiar thing, is that the industry has missed the boat on this. Life insurance is a reward. And that's not an analogy. Life insurance is a reward because not everybody gets it. You have to qualify medically. You have to qualify financially. You have to qualify morally. I underwrote someone years ago who had a presidential pardon from Bill Clinton. The underwriters wanted to know about that. Okay? You have to qualify for it intellectually, and you also have to qualify for it emotionally.
Sounds like a big responsibility.
Hey, thank you. Right. Only responsible, forward-thinking, abundant-minded people buy.
Yeah. Now, and I know we're going to wrap up here shortly, guys. We're going to give Rick his time, but I just kind of wanted to, make the point about the responsibility, of this asset. You look at Google Trends, and I've been fascinated by this recently. Since 2004, if you look at the number of people searching specifically whole life insurance, in 2021, 2022, you see about a 250% spike in people going to the internet and just punching in whole life insurance. It is absolutely, remarkable. And I think that people are taking the responsibility to start to understand from a business perspective, from a balance sheet perspective, what it's going to take in the future, 2023 and beyond, to get by. And I think they're going to start to understand the value of this asset called a human life.
So,
guys, let's go ahead, Rick.
So I just want to make this quick observation. So whether I'm paying $1,000 premium, $10,000, $100,000, $1 million premium, if in year one it's not exciting, in year 10 it looks pretty good. Year 20 it's even better. It's a long-term play. You're playing the long game, not the short game.
Right. And this brings our whole conversation full circle again to the beginning. We were talking about people And when it comes to people, when it comes to money, it comes down to discipline. And are the people you described at the top of this conversation disciplined enough to see 5 years into the future when these things can really start to turn into something powerful?
Those are the winners.
So, guys, yeah, this is a great conversation. I took a ton of value from it. On behalf of my co-host, Dr. Murphy, I'd like to thank Rick and John for being here today. Lots of information in the show notes about where to find them, and we appreciate you guys.
Thank you, guys. Be safe, stay warm, and have a great 23.
Thank you.
This concludes another episode of the Founders Forum. The information provided is for educational purposes and does not constitute financial advice. Consult with qualified professionals before making any financial or investment decisions. For more information on the hosts and for previous episodes, visit foundersforum.io. Thanks for listening.